From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 25th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. Starting here on the USD CHF, the US dollar versus the Swiss franc, we're looking at the daily time frame. Overall, for much of 2017, this currency pair has been in a downtrend. Zoom out one more time here on the chart, and you can see that clearly with the blue trend line and the black trend line. Down at the very bottom, though, we've been in somewhat of an indecision period, not continuing the downtrend, not really turning into an uptrend, but we've seen some bounces back and forth over the past several months. So go ahead and zoom it back in here, and we can see recently we've seen a little bit of a rally for the US dollar against the Swiss franc, with the red trend line pushing through the black trend line and through the 100 period simple moving average, something we spoke about last week in the live trade room. If you look at the green shaded area right in the middle of the chart, 97.50, 97.65, significant resistance back in the past. I circled it with 3 blue circles, resistance there. So if it's going to continue the upside and continue this rally, it will need to break through that green shaded area, 97.65. 50 this week. If it can't do that, if it can't get through that green zone, maybe a little bit of a bounce back towards the yellow shaded area as our support, and of course coming back in contact with that short red trend line, 9720, 9700. It wouldn't be out of the question, I think, also if it pulls back, for us to see it target back down here towards the 100 period moving average, the blue shaded area. There's some Fibonacci sitting down there, 96.65 area for the dollar franc as well. So watching for opportunities in the direction of the red trend line for pullbacks, yellow or blue, to buy, break of the green zone, to buy. Now, if you're looking for a short, a sell opportunity here, I think we need some significant evidence of resistance, therefore, and then reversal before we can look for an opportunity, significant opportunity to go short on the dollar franc. Let's take it on over to the euro dollar, EUR USD. Of course, this currency pair clearly an uptrend for much of 2017. We've been studying the pattern within the trend, the boxes that you see here on the chart, the blue boxes, 1, 2, 3, 4 on the way up, and then of course the current one is the black box at the very top, and we can see the market bouncing around in there over the past several weeks. Let's go ahead and zoom it in on that black box, and you can see support several times down at the bottom, and I'll just widen these blue circles out a little bit. You can see 1, 2, 3 times finding support here into the orange shaded area. Guess what? We're here again today. 1.1870.90 is the orange shaded area. We're challenging it again today. I don't want to call it a downtrend because we haven't broken the black trend line. We haven't really broken underneath the orange shaded area. That's a significant point to this, is until or unless it breaks underneath the orange shaded area, the black trend line, I can't really justify the short yet here for the euro dollar. Only if it breaks through 1870, 1860 and significantly stays underneath it could we justify the short opportunity. The other opportunity to go short would of course be a rally back to the purple or the yellow shaded area, which is nowhere near those. So really, if you're looking to go short, it's an imperative that it breaks through 1870 before you decide to take that short. Otherwise, support and reversal from here, 1890 or higher, back above 19, just like it did here and here and here, we may see the rally once again for the euro dollar. Down to the 4-hour time frame, won't really change any of that. We could just see a really a zoomed in view of those supports here where the blue circles were or are, and the current market challenging there. We saw significant challenges back here too and never broke through it. So I think we need to see the significant push underneath 1870 before we can really call this a sell for the euro dollar this week. Moving on over to the GBP USD, take a look at the top of the chart. We have been, of course, in an uptrend for a long time. Significant rally over the past couple of weeks, all the way up here into the 1.36 level, which is capping our resistance right now. Let's go ahead and just zoom it in on the top of the chart here and take a look. 1, 2, 3, 4, 5, 6, 7 days now, capping underneath 1.36. If we're going to have any hope of this continuing the uptrend, it needs to find support once again, like it has for the past 6 days, at 1.3470. 1.3420 is the yellow shaded area, and we look for the rally back to the orange shaded area, which is just underneath the 3600 level. And if it's going to go higher, it will be an imperative that it breaks through the orange zone. On the other side of things, if we see the market break down through the yellow zone, it could signal some reversal. So we're watching for one of those two things: a break above the orange zone, below the yellow zone, for a breakout of the trend. Until then, just like the past 6 days, bouncing off the yellow zone may produce some intraday opportunities to go long, or the orange zone intraday opportunities to go short for the pound dollar this week. Taking it on over to the USD CAD, this one's interesting here for me. We see the downtrend, of course, not too hard to see that. We've seen twice now where the circles are significant rallies into that trend line. The black circle, a rally, resistance, for several days, by the way, through 4 or 5 days, found resistance into the yellow shaded area and then began the fall. Here we are coming back in the blue circle towards the yellow zone, the green trend line. We're back into some Fibonacci of one of the short-term down ranges, and we're into the yellow shaded area. 1.2335, 2290 is the yellow zone. Let's go ahead and zoom it in on that here, and you can see 1, 2, 3, 4, 5, 6 days now just kind of sitting inside this yellow zone. We saw a significant spike here, a little bit on Friday pushed down, but so far for the past 6 days, 5 days at least, we have been holding up in between 2290, 2335. What we're going to need to see today is either a break above the yellow zone, 2335, for any continuation higher towards the orange shaded area, which would be our next resistance high, or below the yellow shaded area, we look for the market to head on down here towards the blue shaded area. So that's what we're really looking for this week. A breakout of this, well, early this week, the breakout of the yellow shaded area for some direction. If we see the Canadian dollar appreciate because of oil prices changing or rallying, if oil goes up, the Canadian US CAD typically goes down. That's what we'll be watching this week for the US CAD. We'll also watch for US dollar strength or weakness, but at least right now we're capping resistance 23.35. I don't think this is a very good place to go long quite yet unless it breaks that resistance barrier for the US CAD. Moving on over to the USD JPY, we've capped out resistance and just kind of settling out here right around the 112 or just above the 112 level for the US yen. Last week we studied the fact that it got above the 100 period moving average, the green line, just like it did at the black circle back here above the moving average and made a new high. We've been studying the red trend and really the wider trend pattern. If you look out here on the daily time frame zoom out, we're looking at 2017 basically inside this blue box here. We are looking at this year. So the pattern continues. Black trend line show the fall, rise, blue trend line fall, red trend line rise. So we're continuing the 2017 pattern. And if that continues, another rally into the 114s may be in order before the end of the year here for the US yen. Let's go ahead and zoom it back in. We can see that. So if we're looking for a long shot in the direction of the pattern of the trend, we're looking for dips to support, maybe the green shaded area, breaks of resistance, maybe the blue shaded area, and the continuation of the uptrend. Look back here where the blue circle is. You can see some resistance and support at the green zone. Back at the black circle, support at the green zone. So green zone becomes an interesting area for support, 111.80, 65. Blue zone, a break back above there. Heads back towards the purple zone, the resistance high into the upper 112s. For the US yen. Moving on over to the AUD USD, some interesting things happening here. Last week we had a couple of shots at this. We looked at it, a buy into the pink shaded area. That was profitable as it went back to the blue and the green shaded area in the direction of the trends, the blue and the black trend line. That's why we took the buy early last week into the pink zone for the Australian dollar. Then we saw late in the week, we saw it push underneath the yellow, or sorry, underneath the pink shaded area, 79.45, 79.65, and it's just kind of hanging out there right now, underneath the blue trend line, underneath the black trend line, into the pink shaded area. So something interesting early this week as we see the Forex Black Book has started to turn red, which may signal that the bears are the momentum for the bear side is starting to build a little bit stronger here for the Australian dollar. So staying under the black and the blue trend line and underneath the pink shaded area may begin to shift our focus once again to the short side here for the Australian dollar. Zooming in a little bit here on the daily time frame, and you can really see what's going on. Look at the resistance back here, the black box, resistance into that pink zone. We see support into the pink zone. So the pink zone between 79.65.45 is a significant decision point. If it's above it, we may look for the rally back to the blue zone or higher. If it's below the pink shaded area, we may look for the fall down to the next support, which happens to be the orange zone. You can see that back in the black box on the left-hand side, that the orange zone was support, and then of course a break below there. We look for an entire shift of the trend pattern down much lower, down towards the 7,800 level and the yellow shaded area that you see at the very bottom of the chart. So pink zone will be very interesting for us early this week. 4-hour time frame doesn't really change it, but just take a look at this. We did take the short last week into the 79.45 level. Our stop loss, unfortunately, was just about right at the high for the last week, and it came up, took us out, and then settled back down. So let's watch this pink zone today, maybe going into that pink zone, thinking a breakout above, looks for it to go higher, breakout below. We'll look for it to start challenging back lower again for the Australian dollar once again this week. Let's take it on over to the NZD USD. Here we see a little bit, well, several different trends. The blue trend line, the red trend line, and then the rising black channel. Of course, the question of the day will be, or really the week, are we going to see the return of the black trend channel? Buys at the bottom into the orange shaded area, buyers at the bottom above the 100 period moving average, sending it back up towards the top of the channel? Or are we going to see the market break down through the orange zone, the 100 period moving average, and return to the red trend? You know, it was a falling trend, rising channel. If it breaks the bottom of that rising channel, we could look for a new fall later this week. We do have some news out of New Zealand with rate statement, I believe, somewhere midweek for the New Zealand dollar. So we'll watch that as a possible opportunity, but definitely watching this channel. Let's go ahead and zoom it in a little bit. Now, if you were in the trade room on Friday, you'll know that we were in a short from the 73.25 level. Depends on how you handled it over the weekend. If you left it going over the weekend, you may have seen profit all the way back down here towards the orange shaded area. And if you did, you should be in profit protection mode, either closing the trade or reducing your risk by dropping your stop loss into profit if you're still in that short from the 73.25 level. If you stayed in it and the market came up and took you out at break even before falling, that's a possibility as well. Either way you look at it, you should not have seen a stop loss on that trade. 73.25, you're either into profit and protecting profit, or it took you out at break even at market open. If I take it down here to the 4-hour time frame, it really shows you that the risk there. You know, we had the dip down to the orange zone, likely would have taken your stop loss to break even. The zip back up here to 73.25 probably would have taken you out at break even if you were in it with profit. Otherwise, if you're still in it, again, you should be in profit protection mode. If we're going to see it go lower again, underneath 72.60 is what you need to see for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.